It seems like everywhere you turn these days, somebody's talking about AI.
Yeah,
It's like this incredible buzz in the tech world. Every day there's a new breakthrough,
absolute.
and billions of dollars are just pouring into AI research.
It is mind-blowing, really.
It really makes you wonder if this is the real deal,
Yeah.
or are we watching a massive AI bubble inflate right in front of our eyes?
A lot of folks are asking that same question. The speed of investment and development,
Right.
it really does echo those periods of, intense speculation that we've seen before in tech. Like, we all remember what happened with the dot-com bubble.
Exactly.
Oh.
And it's not just a random thought. Joseph Tsai, he's the chairman of Alibaba, a major player in the tech world.
Oh, yeah, for sure.
He's come out with some pretty strong warnings about this exact thing,
Wow.
the potential for an AI bubble.
Oh.
So in this deep dive, we're going to break down his concerns
Okay.
and really dig into what's actually happening and what it all means for the future of technology.
Yeah.
And most importantly, what it means for you.
Yeah.
We've been looking at some excerpts from a fictional podcast that tackled Tsai's comments head on.
Okay.
And our goal here is to pull out the most crucial insights, cut through the hype,
Yeah.
and give you a clear picture of this crazy, fast-moving AI landscape.
It's a good time for this conversation because Alibaba, they're not just commentators, right? They're a big deal in AI themselves. So their warnings coming from inside the game, that makes you pay attention.
Okay, so let's dive into this warning from Alibaba's Joseph Tsai.
Oh, right.
He specifically called out the skyrocketing level of investment in AI. It seems like every day another AI startup gets a massive cash injection.
It is fascinating, isn't it? You see this flood of investments, and suddenly the valuations of these companies, they kind of detach from their actual earnings or, what their assets are really worth. And that's the heart of an economic bubble.
Yeah.
Assets get overvalued because people are betting on future gains instead of looking at the current reality.
Right. And Tsai even made a direct comparison to the dot-com bubble. Back in the early 2000s, I remember that.
Oh, yeah.
We saw so many internet companies with unbelievable valuations, even if they weren't making much money, if any at all.
It's such a good parallel. Back then, the internet was this huge promise that fueled crazy investments.
Yeah.
A lot of those companies couldn't turn that promise into a real business. So the big question is, are we seeing that same gap now between the future possibilities of AI and the actual financial reality of these companies?
To get a sense of the scale of what we're talking about, let's look at the current AI investment scene.
Okay.
The fictional podcast excerpts we looked at mentioned a projection from IDC.
Mm-hmm.
The global spending on AI is expected to hit $300 billion by 2027.
That's just an incredible amount of money. And, it shows how much faith there is in AI's ability to really revolutionize industries.
Right. The hope is that these investments will pay off big time down the road. And we're seeing that cash flow to some big names.
Yeah.
OpenAI, Google, DeepMind,
Mm-hmm.
Anthropic. They're always in the headlines with these huge funding rounds.
Yeah.
And then you've got NVIDIA. They make those super powerful processors.
Right.
The specialized chips that AI needs for all its complex calculations.
Yeah.
Their stock has absolutely exploded because the demand for their tech is through the roof.
It makes sense. NVIDIA's success is a pretty good indicator of how intense things are in the AI world.
Uh-huh.
Their chips are essential for both training and running those fancy AI models. So their stock price pretty much mirrors how much money is going into AI development.
Now, it's important to remember that Alibaba themselves are big players in the AI space. They've got a lot invested. They've got the cloud computing infrastructure that supports AI development.
Yeah.
And they're creating their own generative AI models like Tongyi Quanwen. That's AI that can create text, images, all sorts of data.
It is important to note that Alibaba is speaking from experience. They're not just watching from the sidelines. They're in the thick of it. So when they express caution, it means something. They understand the potential downsides as well as anybody.
Okay. So with that in mind, what are some of the red flags that we should be paying attention to? The things that might suggest that we are actually in an AI bubble.
Well, the excerpts mentioned a few things. First, they talked about skyrocketing valuations for AI startups that aren't really generating revenue.
Sounds familiar.
You see these companies with impressive tech, but no real products or paying customers, and yet they're valued at billions of dollars, purely on the hope that they'll be successful someday.
That definitely reminds me of the dot-com era. It was all about how many users a company might have in the future, not whether they were actually profitable.
Exactly. And the second thing they mentioned was overhyped promises. There's so much excitement about what AI could do, but how do you actually turn that potential into a real business? Can these technologies really solve problems and make money? That's a big question mark.
Yeah, and then there's the issue of speculative investments. It sounds like some investors are jumping into AI just because it's the hot new thing, maybe without really understanding the long-term viability of the companies they're backing.
And that's the risk of FOMO, the fear of missing out. It can push investors to make decisions based on hype rather than solid financial analysis.
So we've got high valuations, uncertain business models, and potentially risky investments.
Right.
But the excerpts also made it clear that these are just warning signs, not a guarantee that the bubble's about to burst.
Right. They're urging caution. We should be carefully assessing AI investments. It doesn't mean the entire sector is doomed, but it's just there might be a market correction down the line where those valuations become more realistic.
Now let's shift gears for a minute and look at the other side of the coin. The long-term potential of AI. It's undeniable. AI is already having a real impact in many different sectors.
The potential is huge. We're
Yeah.
talking healthcare, finance, entertainment, transportation, you name it.
Right.
AI is being used to speed up drug discovery, to improve financial fraud detection, even to create more personalized education. And we can see it in action with things like Tesla's autonomous driving technology or Hollywood using AI for visual effects and even script writing.
Those are tangible examples. AI is not just a futuristic concept. It's making things happen right now.
Exactly. It's
Yeah.
driving innovation. It's creating new possibilities. That's a big difference from some past bubbles where the tech was less developed or its real-world uses were less obvious.
The fictional podcast even compared AI to the internet, calling it a foundational technology.
It's a bold comparison, but I think it helps us understand the potential impact. The internet changed everything.
Totally.
How we live, communicate, work. Even though there was a big bubble and a crash, the core technology survived. It kept evolving, and eventually it fulfilled a lot of its early promise. AI could be similar. It has that same potential for long-term growth, even if some of the current companies don't make it through a market correction.
The excerpts also discuss the global competition in AI development between the U.S. and China. It's a big factor driving investment and innovation.
Oh, absolutely. It's a race to be the leader in AI. Both countries know it's strategically important for their economies and their security. It adds another layer of complexity to the whole picture.
So we have these key players on both sides. In the U.S., you've got OpenAI, Google, Microsoft.
Yeah.
And in China, companies like Alibaba, Baidu, Tencent, they're all pushing the boundaries.
They are the driving force behind a lot of the innovation we're seeing. They shape the direction of AI development and influence market trends globally.
And then you have the issue of government regulations. The Biden administration's restrictions on exporting advanced AI chips to China,
Right.
that could have a big impact on companies like Alibaba.
It's a really important point. Geopolitics and regulations can really affect how AI companies grow and compete. Things like export restrictions on key technologies can create obstacles, especially for companies that rely on them for development.
So putting it all together, what does this potential AI bubble, alongside its long-term potential, actually mean for everyday investors and for consumers?
Well, for investors, the takeaway is to be cautious and diversify. Don't put all your eggs in the AI basket, especially with companies that have super high valuations but haven't proven themselves. A balanced portfolio is always smarter.
Makes sense. Don't bet everything on one horse, even if it looks like a winner right now.
Yeah. And for consumers, we might see a ton of new AI-powered products and services popping up, things like virtual assistants getting more sophisticated or personalized recommendations becoming even more targeted. But we also have to be prepared for disruptions. If some AI companies fail or the market takes a hit, some services might disappear or become less reliable.
So exciting advancements on one hand,
Yeah.
potential instability on the other. The key is to have a balanced perspective. Don't buy into the hype completely, but acknowledge the real power of AI to change things.
Exactly. It's about separating the real potential of AI from the speculative frenzy. Smart investments in AI should focus on practical applications, solid business models, and creating real value in the long run.
So to wrap up our deep dive, let's recap. There are definitely concerns about inflated valuations and speculative investing,
Yeah.
echoes of past tech bubbles.
Mm-hmm.
But the core AI technology is already showing its power. It has the potential to revolutionize many different industries.
Absolutely.
The competition between the U.S. and China and evolving regulations make things even more complex. So for investors and consumers, the best approach is to stay informed, keep a balanced view, and be able to separate the hype from the real deal.
That's a perfect summary. The tension between the excitement and the possibility of a market correction is definitely something to keep in mind.
Absolutely.
Anyone involved in this field needs to stay informed and assess developments carefully to make the most of the opportunities while minimizing risks.
Absolutely.
Yeah.
And on that note, here's a final thought. As we've seen these big technological shifts before, what makes this AI wave different? What needs to happen for all this investment to really benefit society in the long run, beyond just financial gains? It's something to think about as we watch this incredible technology evolve. Thanks for joining us for this deep dive.
Great discussion.
Thanks for being here.
Thank you.
Bye.